The XRP ETFs that have come to market already, that are out there, how have those performed?
They've done exceptionally well.
I wonder how many XRP Army community members are going to accidentally buy. The current DAT meta seems to be unraveling quicker than it spooled up. How do you see things playing out right now for all these companies that are trading below their net asset value and have difficult decisions to make? Which are the next most exciting ETFs applications that you guys are focusing on, and why are they most exciting to you?
The next ones that are coming are going to be Dogecoin and Chainlink.
Do you have a thought on the altcoin market right now?
Yeah, I've been saying this for months. I was saying I felt like the altcoin market happened we're obviously in a bear market.
GM, one and all, and welcome back to another episode of the Coin Bureau podcast. Now, our guest today is James Seyffart. He is a senior analyst at Bloomberg Intelligence and one of the most well-known crypto ETF bros. I hope I can call you that.
Yeah, that's good. That's fine by me.
That the community turns to for all our ETF alphas. So, James, welcome.
Thanks for having me. Happy to be here. Let's get into it.
Cool. Firstly, guys, a few quick disclaimers. Nothing in this video is financial advice. Please consult the disclaimer in the description for more information and consult your financial advisor before investing in crypto. So, James, let's start with the news of the day. And that is that Bitwise has launched an XRP ETF, and I believe BlackRock has filed for a staked ETH ETF in Delaware. So my question is, what are your expectations of demand for both of these products?
People concerned might have some concerns about what staking would do to the product. I'm guessing, we don't know for absolute certainty, that they're just going to launch a completely separate product that will do staking. I don't know if that staking product from BlackRock will distribute the yield or accumulate it. I guess time will tell. So it's a unique strategy. I think the demand will be higher for the staking product, honestly, long term. Obviously, ETH, their number one product, is extremely liquid and by far the most liquid product in the Ethereum world from an options perspective, from a spot trading perspective, you name it. It is absolutely dominating. So this is a unique play from them. So we'll see how it turns out. But I think for the most part, more long-term investors are going to be a lot more interested in, it is 2, maybe 3% yield, and there's probably going to get a little cut of it. So it's not the end of the world, but over a long time, if you're trying to hold on to this thing, that adds up pretty well. And then the other question you asked was about the XRP ETF. We have a few of those that have launched recently. Obviously, Bitwise has the best ticker. They have the ticker XRP, which is good for them. I mentioned Grayscale has ETH. Grayscale, ironically, also has the BTC ticker for one of their products. So getting these tickers that line up with the actual underlying assets ticker, I think is, I don't know exactly how much of a benefit it is, but there's definitely some sort of benefit there. So that'll be good for them. But there's already a few out. So they're not getting out first in the way that they were actually get out first with their Bitwise Solana product.
Yeah, I was going to say, I wonder how many XRP Army community members are going to accidentally buy in their share trading account the ETF when they're trying to buy the XRP itself. But credit to them for getting that ticker. But just going back to your point around the BlackRock ETF filing for the ETH staking. So I'm curious, you said there's potential tax implications as to why they wouldn't just convert Ether into a staking version?
Yeah, technically, if you're getting that yield, it's a form of income. So it depending on, I'm not going to pretend to be a tax accountant, but there were issues in the past of just know that there are people that are concerned about basically what that yield would do from a tax perspective, particularly for people, I guess, moving in and out or holding it in certain jurisdictions. I don't know exactly what it is, but generally that's kind of what I've heard.
Okay. And then the XRP ETFs that have come to market already, that are out there, how have those performed?
Extremely well. XRPC from Canary was the first XRP ETF to launch. And they have, actually, I don't know what the number is, but they've done exceptionally well. They launched and they started with they're well over 200 million. Obviously, XRP price hasn't been doing well since they launched for what's going on in the underlying market, but it's done pretty well. And honestly, for a small issuer like Canary, that's run by Stephen McClurg, so they have $270 million in that thing. And obviously, XRP price has gone down. So they've taken in a lot more than 270 million. The price has gone down. But so for them to do that well is a testament to their success and the demand of the XRP army, So overall, it's done very well. Both XRP and Solana ETFs have done exceptionally well. And I would say another thing in the fact that the two biggest ETF launches of the year were the way that we measure it. Usually over a longer time frame, we'll look at assets and flows, really flows, but we also look at trading volume on day one launch and day two. The number one launch so far this year was Canary's XRPC. Canary is a small issuer. They are not a BlackRock or a Fidelity. The number one launch before that was Bitwise's Solana ETF. So like the top two launches in US ETFs, despite this being like an absolute bear market, we're down 30% on Bitcoin, more in some of these altcoins, they still had the biggest launch days of any product in the US across anything. I'm not just talking about crypto products. I'm talking about all ETF launches here in the US.
That's crazy. So across all types of asset classes, these two ETFs, that's really, I'm curious then in terms of like how much, can you get sort of color in terms of how much of those ETF investors had been retail versus institutional via 13F, or was that hard to tell initially until you get filings?
So actually, I put out a note today looking at 13Fs, but the problem is we got the data for the 13Fs like Monday, or technically Friday for most of them, but Monday. And that was for September 30th. So these things weren't launched. So the 13F data we have for the Bitcoin and Ethereum ETFs is only as of September 30th, which is completely irrelevant because October 10th is when everything went to shit, right? So a lot of things have probably changed, but there's no way for us to know exactly who it is. We do know that both Bitwise and Solana had serious seed capital come in. So probably, like I mentioned, they're both over 200 million, 250 million. Both of them had over 200 million that came in as seed capital. Those would come like probably Ripple probably seeded some of Canary's. There's probably some other people that had XRP that put XRP in kind into the ETF. Same thing with Solana. I think the Solana Foundation might have given money to them. I don't know for sure any of these things. None of this is absolutely confirmed, but they both started off with 200 million, but still, or around there, but still they've taken in a decent amount of money. And like I said, even absent that seed money, these things were still the biggest launches that we've seen all year. So some of it is institutional, some retail. I think a lot of it's retail type focus, but there's no way for us to know right now.
And in terms of your projection for the SOL and XRP ETF, I mean, obviously a lot of it is market dependent and all that, but if you were to kind of ascertain or venture a guess for the end of the year, like how much flows do you think we could see coming into these things based on projections and what you've seen in the past for other altcoin ETFs like the ETH equivalents?
Yeah, so I have a complicated view of this, to say the least. I mean, XRPC, they're taking in like $15 million a day since launch, absent the 240 they took in on day one. And then Solana, I'll give you some numbers so I can say with what actually is going on right now. And I would say two things. One, the way I think about it is, Solana, the Solana ETF has taken in money every day since they launched on October 27th. We're almost a full month in and they've taken in money every single day. So, and BSOL, so I mentioned the Canary product is at 270 million. BSOL is just shy of 500 million. If Solana wasn't down so much, it would be north of 500 million. So I think these will both be billion-dollar, maybe not by the end of the year, but probably multi-billion-dollar products within the next 6 to 12 months for sure. The problem is a lot of people look at what happened with the Bitcoin ETFs, which I talked about XRP and Solana being like the biggest launches of 2025. The Bitcoin ETF is the biggest launch in the history of ETFs, period, stop, on like multiple metrics, volume, assets, flows. Like no matter how you slice it, it was the best thing that's ever happened. And ironically,
AUM to $1 billion in less than days or something like that.
Yeah, I mean, these things have crossed $100 billion in just over 12 months. So, and then if you take another step back, everyone was saying the Ethereum ETFs had a horrible launch. And to be fair, they did. They launched in July. They didn't really start taking in money until Trump was elected in November of 24. And then when they really started taking off was this past summer. So if you look at like the first 12 months of the Ethereum ETF launches, maybe a little bit more, you go to 14 months, that's one of the second best. It might be that group of ETFs is the second best launch of all time. So like we're getting to a point where like, can crypto assets keep doing this? I think we're going to there's going to be a cliff where I think maybe XRP and Solana are probably going to be the big dogs and still a step below Ethereum, which is a big step below Bitcoin. Ironically, so they'll do well. And if you look at it, the way I would think about it is if they're going to, I would look at it as the assets or flows do basically the equivalent of their market cap ratio, right? Like Bitcoin is a $2 trillion asset class. XRP is twice the size of Solana. So I would argue that Solana, I think I would expect it to outperform based on what I'm seeing, its underlying market cap ratio to Bitcoin to Ethereum. XRP, it's so early, but it'll be hard to match up because I feel like its market cap is extremely high. compared to the mind share that it gets from the, crypto faithful and the advisor community for the most part, but we'll see. Either way, they're going to be very successful. There's a whole bunch of products, there's a whole bunch of issuers launching these things, and it's going very well in the early days, despite the fact that we are in a pretty bad pullback right now. So if these things start taking off, look for money to start pouring in.
Yeah, it's quite a polarity there, because indeed many people are looking at these ETF inflows. The Solana product, for example, it inflows every single day. In some cases, outperforming the Bitcoin and ETH ETF in terms of inflows when they have in outflows. And then they just look at the charts and they look at the SOL price and they're like, what is going on here? So like this whole concept, this conspiracy around paper SOL or paper products that are not having any impact on the supply. So I guess there's many factors that people talk about now in terms of what's driving the market. But ETFs in themselves, when do you think they could start having an impact, if any, on price to the point at which they're bringing in enough inflows to be able to impact the price?
So there's two things here. One, people were saying the same BS about the Bitcoin ETFs. They're taking in hundreds of millions of dollars. Why is the Bitcoin price going down at varying times? And it's just unintellectual view of how things work, right? Like the ETFs, even as big as they are not the main driver of the market. The main driver of the market is people selling spot Bitcoin on exchanges like Binance and Kraken and Coinbase, you name it. Like that's where they're a piece of the pie. Don't get me wrong, the ETFs, and they will be a bigger piece of the pie in the names of Solana and XRP and any other products that come to market. But they are just a piece of what's going on. They are not driving the market. This is not paper Bitcoin situations. Ironically enough, depends on how in the weeds we want to go here, but essentially now, since generic listing standards were approved in September, in-kind creation and redemption. So basically, when the Ethereum ETFs launched and the Bitcoin ETFs launched, you couldn't actually hand over Ethereum and you couldn't hand over Bitcoin and get shares in the ETF back. Now you can do that. You can do that with XRP. You could do that with Sol. You can do it with these other assets, Hedera and Litecoin, which also, those products also have like $100 million in assets, namely Hedera, HBAR. People haven't been talking about that for much. It's big in South Korea, but they're also doing pretty well, and they're much smaller assets. So like I said, I think there's going to be a long cliff and there'll be a tail of assets, but we're going to see a lot of ETFs that track these things. But yeah, I mean, it's not paper. It's not paper anything. This is not what's happening. There's money coming in. But the other flip side of it is I kind of hinted at it with the Solana and XRP things. There was seed capital that came in. And if you are somebody who owns 50 million of XRP and you put that into an ETF, that's not net new buying for the XRP and the underlying asset. Theoretically, somebody buying the ETF or whatever, that would do it. So some of this it could be just people moving from, their ledger or hardware wallet and putting it into an ETF for estate planning purposes or what have you. So it's hard to tell exactly what the price impact is, but it's not this, paper XRP, paper Solana driving the price and manipulation. That's not what's happening.
Yeah, that's a very good point. The in-kind contributions coming from investors who already hold the asset. It's just moving it from one location to another. Okay, now, and just that's obviously the Sol and the XRP one that's just recently come, but the US government was on a break, should we call it a break, for its longest a forced break for 42 days, the longest in history. And this obviously, meant that the SEC was off of work and couldn't get back to work in terms of working on the filings that have been pushed for altcoin ETFs. So now that they're back to work, ETF timelines seem to be progressing again. And I'm curious then, which are the next most exciting ETFs applications that you guys are focusing on, and why are they most exciting to you?
So I'll narrow in on what actually happened here. So, and like what's coming next. I won't focus on like what's exactly most interesting, because I'm just interested in the process of launching these ETFs more so than anything. But the next ones that are coming are going to be Dogecoin and Chainlink. Those are going to be the next two ones that get their own assets. We're going to see 5 launches over the next week or week and a half, roughly. But to understand what's going on, you have to understand what happened in that shutdown. The SEC kind of stopped doing everything. We'd have a lot more ETFs in the crypto space launched if the government hadn't shut down. That's my view. You can't say that for sure because you can't prove a negative, but I'm pretty positive that we would see a lot more launches right now. And things would have gone very differently. So basically what happened is Canary was the first to do this, but Bitwise and Grayscale quickly followed. And what's the word? The SEC gave guidance on how to handle IPOs. And one of the things they did was like, if you want to launch and you've already gotten comments from us, blah, 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 you can change a delaying amendment. And it's like this one little thing in there. I did a tweet thread on this, and it's just fascinating because when I saw all these amendments coming in from Canary and Bitwise and Grayscale and a few others, I was like, I don't see anything changing in these documents. I'm not understanding, like, they didn't add expense ratio, they didn't do anything. So I was just confused. And it wasn't until a few weeks later that I realized what was going on because somebody had tipped me off. Basically, they just changed this one thing that was like a 3-sentence amendment about how these things would be delayed and launched, and changed it to 1 sentence. So I was looking for 2 sentences that got removed. And what that did is the SEC had given guidance that once this is removed, you have 20 days and then you can launch. Mostly it seems to have been guided for like people going through the IPO process so their IPO wouldn't be held up. But these ETF issuers, when they launch an ETF, it's almost like launching an IPO. It's a new listing. And so Canary was the first one to do this with Litecoin and HBAR. Bitwise did this with Solana. Grayscale did this with their Solana product. And then all these other ones followed suit shortly after. So that's why we had those products launch at the end of October, because they did this process. Everyone else realized what was going on. And for a bunch of funds, they did the same thing. So those products are the ones that are coming out first. So the last one to do that was Grayscale did that with their Chainlink product, and they filed it on November 12th. No one else can do that. So this process of getting out 20 days after you change the delaying amendment, assuming you've already had some interaction with the SEC, is how these products are getting out. So we have, how many right now? We had 9 that have launched under this process, and we have 5 more that are going to come over the next week or two. And then after that, we're going to see a whole wave of products come to market, both futures, leveraged, a whole bunch of other spot products in these different assets. So basically, the big ones we got new products for over the last month, I mentioned HBAR and Litecoin. Litecoin's the only one that's not doing all that great. HBAR is doing pretty well. And then you had Solana and XRP, obviously. And then Monday, we're going to get a couple more XRP ETFs from Franklin and Grayscale. We're going to get a Dogecoin ETF. That's November 24th I'm talking about. Bitwise is going to launch a Doge ETF on the 26th, most likely. And then Grayscale is going to convert their Chainlink Trust or launch their Chainlink Trust on December 2nd. After that, I don't know exactly what's going to happen because the rules around how all these things operate had changed in late September, and the SEC was working on a whole bunch of stuff. So I think these things are going to come to market, and then there's going to be a whole bunch of others that are coming to market. I count, what is the number, 100? I think it's 130 different products that related to crypto that hold solely crypto or crypto derivatives that are going to come to the US ETF market in the next, or at least have been filed in the next like 6 months.
And of course, the most important ETF that's in the filing right now, apparently, which is the MOG ETF, if I'm correct.
Yeah, so I don't. That. Yeah. I was actually with Stephen McClurg, who's the CEO of Canary, 2 nights ago, and I should have asked him about it, but it didn't come up. We were focusing on these more recent launches. Honestly, I'm not sure how that's going to launch. There's rules basically around that. They came up with these things called generic listing standards. I kind of hinted at it. And if you meet a bunch of requirements, you can list. And one of those requirements is that there's a futures market on like an accepted trading venue. Namely, Coinbase Derivatives is the main one that would do this, but obviously anything like the CME. And then there's one other, Bitnomial, I think, is on there too, potentially. I'm not sure. But mainly it's Coinbase Derivatives, and there's no MOG futures product. So it'll be interesting how if these can actually get through the generic listing standards. So, but there's like 14 different assets that would fit under these generic listing standards based on how I understand it right now. And MOG isn't one of them at the moment, but who knows? I mean, the other part of it is like, there's no concern that MOG, like we got guidance from Hester Person, the SEC early on that meme coins are not securities. So maybe they can lean on that for some of these meme coins, but yeah, I don't know. We'll see.
So the MOG community will have to wait a little bit longer for clarity.
Yeah, that might go into 2026 if we get that launched anytime remotely soon.
The institutions waiting to ape into MOG can wait for then. In terms of, you mentioned the derivative ETFs. So there are altcoin derivative and leveraged ETFs currently in process in terms of the pipeline?
Yeah. Oh yeah, for sure. There's a bunch of leverage, like on some of these alternative altcoins. There's also products. So Rex Osprey is the issuer that's doing a lot of these things, where they have a way that they can get things out as long as there are ETFs listed overseas. So they don't meet the requirements to launch a spot crypto ETF, but that's how they got. So Rex Osprey, I mentioned before that the Solana ETF and the XRP ETF this past month are the two best launches of the year. Some of the best launches before that were when Rex Osprey got these other products out that basically they hold some spot product, but they also hold a bulk of their exposure using international ETFs. So they got Solana staking and Ethereum staking before anyone else because they were using international products. It's not the perfect, cleanest way, but they have a way of getting products out that give you exposure in some way or another without meeting these generic listing standards and having to go through the standard process of where they just hold nothing but the spot asset. So they filed for a whole bunch of stuff that it probably isn't going to get under those generic listing standards for a spot product anytime soon. So we have leverage versions of these. There's people launching defined outcome products where your upside and downside are capped in various different ways. There are tons of people doing covered call products and random altcoins and Bitcoin, Ethereum, all these things. So you're going to see a proliferation of assets. And then also people are combining, saying, all right, we're going to give you 75% S&P 500 and 25% Bitcoin. We're going to give you 75 S&P 500 and 25% a basket of altcoins, all of these things. And then I just mentioned baskets. I would say we could go down this hole if you want. I think the basket products, like an index product of alternative assets, of altcoins, is going to be one of the biggest categories of crypto ETFs rather than individual altcoin ETFs.
Yeah, we'll get onto that in a bit because it is a question I wanted to speak about. But just more to the volume of these applications and indeed some of the more esoteric altcoins that have got applications for. I'm curious then, how much of this is throwing everything at the wall, seeing what sticks, and how many of these products do you think are going to actually stick in terms of the market is really going to want? Because you said the Litecoin one didn't do too well. I mean, we can agree. I don't think the MOG one is going to be amazingly successful, but maybe I'll be proven wrong.
Hey, if my Twitter or X mentions and comments and quote tweets are any indication, the MOG ETF will be one of the biggest launches of the year.
XRP army's got it cut out for them.
Yeah. So two things. One, that's just how the ETF industry works for the most part. It's not just with crypto. They do this with everything. They throw spaghetti at the wall. We call it the spaghetti cannon. And whatever sticks. They keep it up and they lean into it. And then whatever falls, they just liquidate and close. If there's no interest, they're going to close it because it's not profitable for them to have it. And honestly, that's capitalism, right? That's free market capitalism. It's deciding, do people find value in these products existing on the exchanges? Are they going to buy them? There are a few products that I didn't think would do all that well that have tens of billions of dollars in them, right? So the market will decide what the value is. And yeah, a lot of this is just that spaghetti cannon. They're going to throw a ton of stuff at the wall and see what sticks. I would argue, I've said this before, but like some of the stuff that's being filed, not just in crypto, but in everywhere, is like, it's more like throwing something at the fan, right? Like it's less spaghetti at the wall. It's like going to make a mess, but the market will decide, right? And it's a lot of money to launch these products and keep them running. It's not like they're launching these things and it only costs them like $1,000 to do it. Like it's tens of thousands of dollars to launch a new product. So if they're doing it, they think there's a decent chance that it can find success. But the reason they do it is because if you get one or two that get to like a couple $100 million, they'll cover the cost of launching 10 other products that failed. And then you have into perpetuity, theoretically, a decent product that will provide you revenue and cash flow. So yeah, that's what's happening here.
Okay, got it. So coming back to your point around more thematic baskets, and I'm curious, how far are we from seeing these more creative thematic baskets? And more specifically, what themes do you think would actually resonate with advisors and investors?
Yeah, good question. So we have one product that it's Dime from CoinShares, and they hold international ETFs, ironically enough. It doesn't have a lot of assets, but it's interesting in the sense that it's giving you exposure to, I think, 10 altcoins, but a bunch of altcoins at an equal weighted basket, and it doesn't hold Bitcoin or Ethereum. BitW is the Bitwise 10 that holds Bitcoin and Ethereum and then 8 other assets. I just think overall, any product, I don't want to go into like the weeds of like this, like, smart chains and different things like that. I think there will be all baskets of ETFs that do that at some point down the line. Maybe next year or the year after, that's probably where things are going to go. But we already have some products now that are just giving you diversified exposure to the crypto world really simply and easily in one ticker. So if you're an advisor and you're thinking about putting your exposure to crypto, you're just going to buy an ETF that gives you a basket exposure, because that's what you do with stocks. That's what you do with bonds. It's just an easy way for them to think about doing it. A lot of, Bitcoin maxis will be like ripping their hair out as I say this. But if you look at like Grayscale's GDLC, which is already an ETF, the vast majority, 89% of the assets are in Bitcoin and ETH. And then you're getting exposure to like 3 or 4 other assets for the remaining 10%. So theoretically, I think a lot of people who want exposure to this already have exposure to Bitcoin, maybe already Ethereum. So some of these altcoin products where they're going to give you a market cap weighted exposure. So we're going to give you an equal weighted exposure. I think those types of products are going to do very well. But the first 4 or 5 individual assets will do well. But I think the basket products, if you total up the AUM, I think they'll be bigger, more impactful for the longer tail of assets. So like we talk about Chainlink right now and some of these other products, if you have, tens of billions of dollars in an index product, they might be more impactful. Their flows and how much of those longer tail of altcoins they hold might be more impactful to the underlying price than an individual ETF that tracks it that only gets, $80 million in assets, because tens of billions, and even if you're only like 5% of the fund, that can be more impactful than the flows to an individual asset. This happens with emerging market equities in many regards that we see in the ETF space. So you come back to me 5 years from now, I think basket products that give you 5, 10, 20, 50 different crypto assets, market cap weighted, different weighting exposures, and then some of the themes, or even honestly actively managed exposures to different things. If you have an active manager that's going to be picking coins and weighting them, I think those products, I think that's going to be one of the biggest areas in anything we'll be talking about.
Yeah, really interesting. So you actually think the SEC could approve actively managed altcoin ETFs?
Not right now, but issuers will figure out a way to do it in the coming years.
Interesting. So just before we move on to another topic, I'm curious, in terms of the current crypto ETF landscape, what do you think is the one thing that's missing that you think needs to be a gap to be filled of some description?
It's hard because we don't have anywhere near the level of altcoins. I mean, now we have Solana and XRP, which are obviously some of the bigger assets. I mean, honestly, more basket products, more index products would be the thing that I'd say is missing. Like, I think a lot of advisors have exposure already to the space holding Bitcoin. So if somebody were to, there's filings for this, that they're going to come out. If you launch, here's the top 20 X Bitcoin, and all of a sudden you're like, all right, I have a 2% allocation to Bitcoin for my clients already. I don't need to change that, but I would like to get some exposure to the other things going on, Ethereum, Solana, you name it, whatever. Maybe some of these longer tail assets. A lot of people tend to view it in the way that they viewed like internet stocks from the dot-com crash in like 99 and 2000. If you tried to pick one company that's going to do well, unless you picked like Amazon or Google, like you probably got blown up. So I think people are viewing it as like some of these coins are going to be completely worthless. That's my view. I think a lot of these things are going to be completely worthless. So I think people who want exposure are going to be like, I have my Bitcoin exposure and I want to get exposure to other things else. So I think a product where it's like I said, CoinShares already has the product. There's a bunch of filings. One is like altcoin ETF. One is altcoins, which is basically like altcoin is everything but Bitcoin. Alt is everything but Bitcoin and ETH. So I think those types of products will garner some assets. But overall, I think a lot of people coming into this space, they're the crypto hesitant, the Bitcoin hesitant, if they haven't been in yet. And so if you give them a product that's going to be a diversified exposure, I think that's where things are going to go. So we're like in the very, very, very early stages of getting those types of products to market.
Yeah. Okay. So more altcoin ETFs. And my next question, I probably I kind of know your take on this, given as an ETF guy, the current DAT meta, which I think seems to be unraveling quicker than it spooled up. It's probably one of the most expected bubbles, and it appears to be playing out as many had predicted. So you were skeptical from the start, and I'm curious, how do you see things playing out right now for all these companies that are trading below their net asset value and have difficult decisions to make?
Yeah. So my framework, I always had two sets of framework. One, as you said, I always thought these 2.5, 60% premiums over MNAV like didn't make sense to me. Like I could make the argument that should be a premium in the way that a bank earns a premium on its book value because it can use leverage and financialization to do things that like a normal person can't do. They can generate more profits and cash flows. So I always thought some of these assets, some of these DATs would be able to operate at a slight premium, potentially 1.9 times MNAV. That never made sense to me. I know some people thought it did. It just didn't make sense to me. Now, again, Saylor, for however long he's been doing this, it's been a long time now, has been able to accretively acquire Bitcoin and add it to, if you're a shareholder, you've been pretty happy with how things have operated outside of the last month or a couple months. But I would also make the same argument that most closed-end funds, so a closed-end fund is something where you can't do that create redeem process of an ETF. So the capital's kind of stuck. It's like a company with shares and it just invests in underlying assets or asset. And it can trade at a premium discount, much like an MNAV. Most closed-end funds trade at a slight discount because there is no creation redemption process. That's just the way they work. There are fees, there are costs in doing this. So like you have trapped assets, but they can be actively and perform very well. So if you can get them at a discount, it works out over the long term. So I don't know. I think this is not me saying this. There's been people saying this forever. There's going to be a whole bunch of acquisitions. Most likely it'll be accretive to acquire a DAT that is trading at a steep discount to its underlying holdings that it has. So it'll be interesting how that all plays out in the coming months. But yeah, I think, some of these things trading at slight discounts and maybe slight premiums makes sense to me. But this idea that these things should be trading at, 2x, 2.5 times, I mean, it doesn't make sense to me as somebody who is a TradFi guy. It never made sense to me. So I get it. I get the argument that they can accretively issue debt. I think it makes sense that specifically with things like Ethereum and Solana, if you can put this to work in the DeFi protocols, staking, you name it, actually earn cash flow and then reinvest that into staking and holding the underlying asset. I think that's almost like an actively managed fund in a way that you can actually outperform the underlying asset over the long term. I could probably make an argument both ways over whether it should be trading at a slight discount or a slight premium, but I would discount heavily that it should be trading 2x the underlying NAV. That doesn't make sense to me.
Yeah, I mean, it kind of made sense for a shareholder buying in a levered bet on a crypto asset prices were going up. But,
exactly.
As everyone has expected, when things start reversing, you have the reversal of the flywheel, the unwinding of it, and that seems to be playing out. So I think that they're stuck now with decisions of either buy back your shares, sell some crypto. I saw just in one of these ETH DATs just recently before the interview had sold some, bought back their shares. Tom Lee's going strong though, so I mean, and so is Saylor. So I don't know. My personal view is I think those two could potentially survive, but the rest on the margins are going to struggle. So yeah, I mean, it reminds me. Does it remind you kind of like the SPAC boom?
100%. When you were asking the question, I was thinking this reminds me of when SPACs were going crazy and meme stocks were going crazy. I was like, this is going to end badly. But if you get in halfway into that explosion, you did really well, right? So I think that's what happened with some of these. You mentioned the flywheel. These things were spinning in a positive direction. They're buying more assets. They're issuing debt. The prices are going up. They can buy more assets, issuing debt. And it's like this flywheel, and it's spinning the opposite direction right now, as you mentioned. So how many of these? I think there's just too many of them that came to market. I can make an argument that a handful of these in the US makes sense, maybe one or two in other countries, things like that for an asset. But when you have, 20 different Bitcoin DATs and 15 different Solana DATs, and it's hard. It doesn't make, I don't know. It's hard. I just don't know. It's going to be very competitive.
No, I get it. Moving on then, I just want to, obviously something else that's in the news right now that getting a lot of attention is the market structure bill, right? So again, Congress is back, they're working, and this could obviously be great news for, I suppose, the SEC, because if you start defining roles between the SEC and the CFTC, and it helps with this positive regulatory slant. What's your view, first of all, on what it means for the crypto ETF landscape, the market structure bill, and then its chances of passing in the net before the end of the year?
So I won't say I'm particularly inside baseball on its chances of passing. And I would say something that might be out of consensus for the next 3 years. I don't think it impacts anything for what's going on with the ETFs. The SEC is moving forward. Atkins is leading the charge. CFTC is working with Atkins and the SEC. Things are going very well. The problem is this is how things should have been operating under Gensler. But if you have somebody running the SEC and in the White House that has different prerogatives and it just completely wants to kill the industry, if you don't have a law for them to fall back on, it's just SEC and CFTC guidance. And you can change those things, maybe not completely, but at least at the edges, which is what we saw under Gensler. So you kind of need a law of the land for them to fall back on. And I don't know. I'm not super optimistic. I think what might end up happening is you might get this clarity bill that doesn't actually give as much clarity as people want. And they can take the victory and say they did some things, but DeFi isn't fully fleshed out on what's allowed, what isn't allowed, things along those lines, which is where things seem to be held up. Unfortunately, it seems that the Dems are very held up on arguing in the fact that they don't want the Trump family benefiting from this stuff, but they're heavily involved as it is. So I don't know how that's going to get flushed out. So yeah, I'm cautiously optimistic that we'll get something. I'm just worried that it's not going to be the type of clarity that the industry actually really needs. And honestly, like I said, it won't matter that much while Trump is in office and Atkins is at the SEC, and they seem to be they're very much more libertarian minded, free markets, just protecting people from frauds and scams, which is how I think it should be operated. That's the way the SEC is set up to run. And it is not how things were operated under Gensler. So yeah, that's the number one concern. But There's a whole bunch of stuff the SEC is doing that's moving things in the right direction without this Clarity Act. It doesn't matter. We got those generic listing standards in September that are the reason we're getting these ETFs launched right now. They did a whole bunch. They're started giving actual guidance and issuing these letters from Hester Peirce and the Crypto Task Force. So all these things are very positive, and they don't have clarity. Like I said, the problem is what happens when they're not in charge anymore.
Yeah, very good point. Also, an interesting take that it's not going to be all that it seems.
I hope I'm wrong. Things looked really good a few months ago. Yeah.
Rather be pleasantly surprised than desperately disappointed. That's a motto everyone in crypto investing should actually take with them, to be honest, when it comes to expectations for what's going to happen this year, what's happened and what could happen in the markets.
And I would also say it matters a lot more for assets other than Bitcoin. I don't think clarity, I mean, maybe on the fringes it'll make things, because anything that makes this ecosystem better is going to be better for Bitcoin. But for the most part, a lot of this stuff has a lot more to do with, what's going on protocols like Ethereum and Solana and other smart chains and DeFi, and really what's happening on those decentralized exchanges and stuff like that. That's what really needs to be settled. And like whether or not you get clarity probably doesn't matter all that much in the grand scheme of things for Bitcoin. At the edges, sure. But yeah, that's the other thing I would point out.
Yeah, fair. Moving on to the markets a bit more broadly now. This is the $1 million question, but like, how would you characterize the current state of the crypto market right now? Is it bull or bear? What is it, bull or bear, man?
I mean, we're obviously in a bear market. We're 30% down. So my view, even before this, was I was like, either this is a normal step back in a bull market, right? They typically have 25 to 35% pullbacks and then go on to reach new highs. We had one in March and April of this year. It was like 30% pullback. So if we had the same pullback we had, level of pullback from the all-time high, we'd have gotten to like 89. And basically that's what we did. We went to 88, I think, on Bitcoin specifically. The question is this one of those pullbacks where, and this is how ETFs operate too. And if you look at the flows and the assets of the ETFs, it's like 2-3 steps forward, 1 step back, couple steps forward, 1 step back. That's just how it operates. That's how Bitcoin operates itself. The problem is every 4 years, there's this giant leap back. And I'm not going to pretend to say like, is this one of those step backs and we've already kind of are nearing the bottom? Maybe we go another 10K lower, or is this like another one of those massive leaps backwards where we get a 50% plus pullback? I won't pretend to know. I'm not going to act like I know that. My inclination was I thought we'd get another 30-ish% pullback. We've already hit it. This could age very poorly, but yeah, I won't pretend to know. I'm not even allowed to say a prediction of like where I think prices are going, technically speaking. But yeah, my inclination is like, I'll tell you this. There's a huge, everyone's talking about like, is the 4-year cycle over? I don't know about that, but I will take the other side. I think the 4-year cycle is going to be way more muted going forward compared to what it has been. So if this is a big leap back and we go much lower than, a 30% pullback from 126, maybe low 80s, 70s or something, maybe even lower, I think the upsides and the downsides are going to be capped a little bit more now that we have a lot of institutional capital here, particularly from governments, but mainly from the ETF investors. If you're an advisor, the way you think about getting your exposure to Bitcoin is you're going to do it via a percentage of your portfolio, whether it's 3%, 5%. The highest I've heard of any advisor doing, or that's not true, I've heard of advisors doing much higher, but for the most part, the highest I heard in any semblance of more than one advisor is like 10% they recommend. And if Bitcoin goes up double, all of a sudden your portfolio, it's depending on what's gone on with the rest of your portfolio, assuming it stayed flat, you now have a 20% exposure to Bitcoin. If your plan is to have 10%, you're going to sell, right? And vice versa. If your goal is a 10% allocation, everything else stays the same and Bitcoin cuts in half, what are you going to do? You're going to buy. So yeah. I think that's going to like kind of keep things a little more range bound. We could have short squeezes and blow off tops and bottoms and things along those lines. But I think roughly speaking, on a quarterly basis, you're going to have a lot of advisors reassessing, going in and out of the ETFs. But that hasn't happened yet. For the most part, people have there have been outflows. We've seen like $4.5 billion in outflows since October 10th, when we had that blow up on the Bitcoin ETF specifically. But for the most part, people are simply adding. There's very little pulling back in the grand scheme of things. We're over 62 billion has come into the Bitcoin ETF since they launched. We've had 4.5 billion come out in the last 6 weeks. It's a drop in the bucket, really.
Yeah, that is surprising how resilient they've been given what's happened since October. And I think that part of the reason for the really, really poor price action is, I don't know, there's all these theories around what exactly happened out of 1010. Has
Yep.
some big player that we don't know about being completely smoked and as a result slowly exiting. We'll only find out soon enough when the bodies come to the surface. But yeah, I think that could be a part of the reason as well. Also, why we've had a disconnect between what's happening in TradFi markets in terms of stocks and why crypto has just had this, just really flat price action.
It feels like there's somebody that's forced selling or trying to dump the market, but like during US market hours, it's just like consistently like dump, 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 dump. I don't know. There's no way to know for sure if somebody got pulled out in a body bag. I would say the other thing I keep hearing from people, there are certain people really shouting from the rooftops that they're concerned about quantum breaking Bitcoin. So I think there might be some concern there. I don't really know. I'm not intelligent enough to know how real that is. But yeah, those are the two theories I've been hearing, that somebody blew up on 1010, or maybe more than one person, and we won't find out for some time. I mean, it took many months to figure out that FTX was actually completely fully insolvent. So
yeah, I think quite a few people got wrecked. But we'll discover that soon enough. The real casualties of 1010 were the altcoins.
Hey, leverage kills, guys.
Yeah, leverage kills, guys. Don't do it. Don't do it. Don't slide that leverage slider. Just avoid the temptation to enter the casino. I mean, obviously, this relates to the excitement and the polarity between the excitement we see with altcoin ETFs and the altcoin market more broadly. And, everyone's been crowing on about, altcoin season is going to come in the final stage of the bull market. And it seems like the altcoin season is it's like an ice age. Do you have a thought on the altcoin market right now? I mean, do you think they're going to start catching a bid, or is it basically just the Bitcoin story for now?
Yeah, I've been saying this for months. I was saying this. I actually used to be a regular co-host of Laura Shin's Unchained, but when I was on there, I was saying I felt like the altcoin market like happened in DATs. Like I think the altcoin meta and late stage stuff happened with the DAT companies. That's where all the interest went. People were trading those and the miners and a lot of other things like that rather than altcoins themselves. That was where the real beta and leverage ended up going, from my point of view. And now that's deflating. I don't know. I could be wrong, but that was the way I saw it then. And I kind of think that was the correct way to view it. I hope for all the like heavy altcoin investors that I'm wrong and you get your bull market at some point. But yeah, that's the way I viewed it. I think all the interest went to the DATCos, or a lot of it at least.
So NGMI for altcoins right now.
I mean, a lot of these things will be fine. I think there's real use cases for a lot of these different products. Am I going to pretend to say I know exactly which one is going to be the dominant player in different areas 10 years from now? No, but I think there's going to be multiple of these smart chains that will do very well. And I just don't know enough to say which exactly one it is. I'm more technical than your average person, but I'm not technical enough to like talking about the different code and benefits and pros and cons of these different things. I mean, I just think people are the part of the problem with this whole entire space, even some Bitcoiners, is like Bitcoin is up, 100% and change from when the ETFs launched, and people are really upset. Like if they're not getting 100% a year, it's not good enough. And like, that's just not how the real world works. If you were early and you took all the risk in 2015, 2013, what have you, or you were early to Ethereum, some of these other coins, like, yeah, you got the risk, but like, that's just not something you're handed on a platter every month, every quarter, every year. Like that's just not how the world works. So that's the other thing I'd say.
Yeah, it's a good point. I mean, to that, like the reason that people had invested in altcoins in the past was the higher risk and higher reward people could get from it, right? As a higher beta play on Bitcoin. And now this ties into the question around all these ETFs that are launching and these structured financial products, which are themselves in some way could be higher leveraged beta plays on an asset like Bitcoin. So I wonder how much of the lack of interest in buying altcoins in general is that people now, and retail investors and institutions as well, have a lot more opportunity to get higher leverage on crypto assets than going and buying an altcoin on an exchange. I mean, don't know if you have a view on that at all.
I 100% agree. I mean, in 2017, Meta, 2021 even, like if you wanted high beta Bitcoin, you went to an altcoin. Now you literally you can buy options on a Bitcoin ETF. You can just use that lever we were talking about to get levered exposure to Bitcoin. Like the ecosystem has become a lot more mature than it was. And if you just want levered exposure to an asset, you can pretty much get it anywhere, however you want. Obviously, there was still, some altcoins did exceptionally well at different times. I mean, Solana, not that long ago, was a single digit price point. It's just, in general, it hasn't happened across the board. And that might be just a sign of the market maturing. Like, you're not just going to get, 15x pumps just because you were in something early, even if it has no value. Who knows? I could be wrong.
Yeah, it's like that meme when everyone on crypto Twitter is like, when retail, and it's like, we are the retail. So
yeah, the retail's there already. Yeah, it's already happening.
There, yeah. So yeah, James, just to finish off with a few fun questions. This is the time for the price predictions. No, I'm joking. I know you can't do those.
Yeah, unfortunately,
but
you honestly, you don't want my price predictions anyway. Short whatever I would say anyway.
It's good. I'm not going to try and hold you to it. It's all good. I understand. Anyways, making price predictions on YouTube is the most fraught endeavor you can ever have. Never do it. Coming from someone who operates on crypto YouTube, I can tell you never do that. But here's a question. So which crypto, it can be broad, like which ETF in general do you personally think should not exist? It's like pointless. Shouldn't exist.
Crypto specifically?
It can be crypto, it can be broader. I mean, maybe one crypto one and one in general.
So I am like as far left on or freedom side of this as you can possibly be. There are tons of products I would never invest in. The problem with ETFs and even these crypto ETFs and some of them like the 2x levered, whatever, like you want leveraged Bitcoin exposure, there's covered call exposure. They're not things that I would ever invest in. But part of that is because one, I have restrictions on what I can and cannot hold. I have to hold for a certain period of time. I can't sell for a game with a certain period. Like there's all these restrictions I have, but that doesn't mean somebody else can't find use in them, right? Like a 2x inverse Bitcoin ETF is not something I would hold long term. But if somebody bought that, 4 weeks ago, they've done exceptionally well. It's just that I just believe that I can't do market timing. So, and obviously there's plenty of these people love these products. They have billions of dollars in assets. Some of the ones I just mentioned. I don't know. I really don't like, there's these covered call ETFs, heavy cover call, and they basically have like 80% yields, but really all it's doing is return of capital. They're just changing the return stream from, capital gains to distributions. And I think that could be tax inefficient depending on how you're doing it. So I'm not a huge fan of those products in many ways. But yeah, I don't know. Like I said, I view the spaghetti cannon as a good thing. If some issuer wants to launch an altcoin that I've never heard of, go for it. And if some point, like at many points, I had never heard of Solana, I had never heard of some of the Chainlink. And if these assets end up taking off, that issuer is going to be really happy that they're the only one with an ETF that has exposure, right? So there's tons of these like long tails of assets that are going to come out, like Injective, SEI, AXL, Aptos, SWE, BNB, Near, Ondo, Avax, like Canton, like all those things are going to come to market at some point in the next year. Am I going to be buying them up as soon as they come to market personally? Almost certainly not. But if one of those assets or protocols starts doing exceptionally well, those issuers are going to be very happy that ETF exists when it happens. So that's more the way I view the market. So yeah, I'm sorry that's not as spicy as like this shouldn't exist, but that's the way I view it.
Carte blanche. It's a free market, man. People should decide what they want to invest in. Should have the option to do it. Okay, last question then. What stresses you out more? Too many emails in your inbox or too many ETF filings?
Emails. Because emails I actually have to do something about. I can ignore the ETF launches sometimes. And I have a way. So same way with emails, like this email is important and I need to get to it. I can do the same thing with the ETFs. But emails, I'm just bad at responding. I'm bad at responding to DMs on Twitter and LinkedIn and all these other things. So yeah, that stresses me out more.
But you don't.
Something I need to improve on.
I don't think you ever let an ETF filing go to waste. I mean, you have to keep the folks on CT up to date, man. They relied on for the ETF alpha, bro.
Yeah. Well, I also there's people out there that think I'm like trying to be the first one to announce it. And it's like, no, sometimes I'm tweeting about this like 4 hours after it was filed or a day after. Like I'm just trying to cover it so people know. There are plenty of other people out there that are like way more like have automation. So these things are like tweeted out like before I even see them in some cases. Mm-hmm. Sometimes I'm early, but I'm not trying to be first. So my job is, to do what we do here, provide analysis. Why does this matter? Not like this happened. I'm never going to beat an algo or AI or whatever to announce some sort of news.
Well, that valuable context and color is much appreciated as always. Thanks again for this conversation, James. I had a great time. Where can people follow you other than Twitter or X? Do you have any websites, blogs, or anything? Or
so unfortunately, I'm not allowed to. So if you're a Bloomberg client, which I'm guessing a very, very, very small portion of your audience is, if at all, that's where all of my stuff is. So I tease a lot of it on Twitter. I'm very active on Twitter, or X, I should say. So that's the easiest way for somebody to get a hold of me. I'm also on LinkedIn, but I don't post nearly as much. But if you're on the Bloomberg terminal, hit me up. That's where all of my research is going. I might throw a couple chart or two on X, but like my full blown notes, and if I show one or two charts on Twitter, I probably did 6 or 7 on the terminal. So that's where like real in-depth type stuff is. And that's where I can be a lot more verbose, if you will. So yeah, terminal will be number 1, and number 2 would obviously be X.
Cool. So I'll link to that below. And thanks again, James. Looking forward to having you on again. And I'm also looking forward to your coverage of the MOG ETF launch.
Hey, like I said, if social media interactions, quote tweets, comments, likes is any indication of how successful these things will be, which I'm not sure they are. I don't think they are. To some level, maybe a little bit. It'll go really well. And I think it'll shock a lot of people, but I don't know how much of that is bot farms.
Could be the biggest launch of 2026. Surprise to the upside.
Hey, so far, 2024, biggest launches of the year were Bitcoin and Ethereum. 2025, biggest launches of the year, XRP Solana. Is crypto going to keep the crown in 2026? I guess we'll find out.
Go down that risk curve. Altcoin next.
Trump and Melania coin have been filed too. So
yeah. Cool. Thanks a lot, James.
Thank you, Nick. This was fun.